All right, Juliette, should we kick this off?
Let's get going. Yeah.
All right, cool. Well, welcome everybody to Real Estate Insights in 15. My name is Colin Slattery. I'm a real estate agent both in Texas as well as Arizona. I serve the DFW market, the East Texas market, as well as Phoenix Metro. So I'm excited to provide these insights to you. The goal is to keep it under 15 minutes. And so here we go, Juliette.
Yeah. Thanks for having me, Colin. I'm Juliette Cossey. I'm a loan officer with Bison Ventures Mortgage. We do purchases, refinances, and HELOCs. I'm also licensed in Arizona and Texas. I am an Arizona native, been originating for about 8 years now, and I'm a second generation loan officer. So runs in my blood, but looking forward to being here with you today.
Cool. We're excited. All right. All right, Juliette. So, big thing of the week, the Fed's cut rates by 25 basis points. What does this mean? What's going to happen with buyers? What should we be looking out for? I know a lot of my buyers and sellers actually have been asking this question.
Yeah, great question. This is actually already priced into where mortgage rates are right now, which is why about 6 weeks ago or so, we started to see them tumbling down on that downward trajectory because they started discussing that they were going to do this rate cut. Some people thought maybe 50 basis points, but the majority of people thought it was going to be 25. So that is baked in already, which is why you've seen them go down. We're hovering just a little above 6% right now, where previously we were around 7%. You are not going to see a direct impact on your interest rate for a mortgage like you would a HELOC, a credit card, or a car loan. You would automatically see that rate go down by 0.25%. I do have some clients calling me saying, hey, did my rate go from 6.5 to 6.25? No, that 6.5 already encompasses what the market's doing. They're already trading off of that. But good news, we're definitely in a cutting cycle and we should potentially see them cut a few more times next year. We are seeing some dissent among the members, meaning that some are saying we should cut, 100 basis points next year. Some are saying they don't think we should cut anymore. So it'll be really, really interesting to see what happens next year with such a divided opinion among the members. But rates are projected to continue to go down, even if they don't cut rates, if the Fed doesn't cut rates, but if economic reports continue to come out that are beneficial for us, then we could still see them continue to trickle down, which we most likely will. The two things that really moves the market with rates is going to be the job market, so the unemployment sector. If we continue to see that weakening, jobless claims go up, things like that, that should help rates go down, and as well as inflation. If we continue to see inflation go down, that should continue to help rates trickle down. We have seen that kind of stalled out a little bit, but I do think that, give it a few months and it'll keep going down a little bit.
That's helpful. Okay. So we could still see, even if we don't see any more rate cuts from the Feds this year, we could still see some trickling down of the interest rate itself based on some of the other factors you mentioned.
Correct. Yep. The Fed's rate is not the only thing that directly impacts mortgage rates. And mortgage rates, they do typically, if the Fed is cutting, they will follow that trend, but they don't walk in synchronized steps. So even if those stay the same, then we'll see them continue to go down. Correct.
Okay. Common misnomer from a lot of people I hear.
Yeah.
Cool. Awesome. So, one thing that most people know is that, we both work in Arizona and in Texas. I, having started my career in Arizona, now live in Texas and work in both. And you live in Arizona and you work in both. So, how does this affect with this interest rate kind of changing over the last month and then now the Fed funds rate dropping and it looks like we're maybe going to see some more in the future, hopefully, we'll see. How does that affect affordability in both Texas and Arizona? Particularly like the DFW market and Phoenix, which mirror each other in a lot of ways.
Yeah, absolutely. They are very similar. And so, as far as if we're just talking specific interest rates, you aren't really going to see a difference from state to state. The zip code isn't going to impact your interest rate. Things that impact your interest rate will be, well, they're all kind of based off the same market. And then from there, it'll be higher or lower based on your down payment, your credit score, factors like that. There are some low income areas that the government is trying to get more people to move to in both Arizona and Texas that have special programs where you can get a betterment to your rate through the government because they're trying to promote home ownership in those areas. Beyond that, though, the property address is not going to matter. What's going to matter more is the local market conditions. So, and you can speak to that a little bit more, Colin, but I do know in both states, concessions are a big thing right now. So that helps buying power to get the interest rate down. But demand, concessions, things like that are what really are going to affect affordability for both states.
Yeah. Yeah, absolutely. I mean, like I said, the DFW market, and I work in Tyler, East Texas, as well as DFW, as well as Phoenix. And the DFW market and the Phoenix market we're seeing a lot of the same kind of concessions. We're seeing a lot of the same kind of price reductions and stuff like that. And so I would assume that as rates continue to come down, hopefully, as we've seen, that we're going to start seeing a pulling back of that. And actually, one of my other colleagues who does a lot of data analytics, particularly for the Phoenix market, kind of said as much, that we're starting to see somewhat of a reduction in concessions and stuff like that. Now, that doesn't mean it's out of the game, and it doesn't mean it's going away for a long time, which really brings us to our next slide. And how is that affecting sellers, right? So, a lot of my sellers are always asking the question, depending on, it doesn't matter what market it is, but they're asking the question of, is it a good time to sell? And I always say, well, it depends on what your goal is, right? So if your goal is because you're trying to move somewhere, so let's say you're moving from Texas to Arizona, or from Arizona to somewhere else, or to Texas, whatever. If you have to move, then, obviously we're going to kind of tailor your listing to that. And then if you don't have to move, then it's up to you whether you want to sell. I would anticipate, probably not in the immediate future, but I would anticipate that sellers are going to start seeing some relief on their end, because they have gotten beat up a little bit over the last couple of years from buyers, understandably. I mean, that's how the market goes. Sellers had a good market, 4 years ago. And so I think, based on what I can tell, we're going to start seeing more of that balanced market where sellers are giving a little, but buyers are also giving a little, and everybody's able to kind of meet where they want to. And so I would say sellers, don't give up hope yet. I think that if we continue to see rate cuts, we continue to see interest rates generally trending down, then I do think that, homes are going to sell a little bit faster. We're going to see the inventory come down, which is certainly in Phoenix a lot higher right now than it was even in 2019. And I think that we're going to see, a little bit more give on the side of buyers. Now, this really brings me to my really most important point to this, is that, for a lot of buyers that are looking to buy, don't sit on the fence too long, because if we're starting to see that trend of interest rates go down, we're, like I said, going to see inventory going down. And then the next shoe to drop really is for prices to start going back up. And so I would certainly rather take a higher mortgage, which is exactly what I did, for a lower price point, knowing that I will gain equity over time, hopefully, and that I will potentially have the opportunity in the future to refinance. And so that's the thing that I think is a really big key takeaway for a lot of people, is when you're selling your home, consider, when do you have to sell? If you have to sell, then yeah, we can tailor your sale to the current market. If you can wait a little while, even till January, let's say, you might see more favorable conditions. And if you want to buy, I would say, focus on buying more right now instead of waiting 6, 12, even 18 to 24 months.
Absolutely. Then they can get in on that appreciation and refinance and get that lower rate. So it's the best of both worlds. I completely agree with that.
Exactly. So we have about 5 more minutes, Juliette. One thing I was thinking about before we jumped on this call is I think it'd be really great, one of the things about the Feds dropping the rate and interest rates trickling down over time is sometimes it doesn't always translate in English to the rest of the world, particularly even real estate agents who, we buy and sell homes. We don't do the mortgage side of things like you do. So for somebody who is buying a home, what is this adjustment in interest rate that we're seeing? How is that going to affect their payment? And keeping in mind, in Texas, we have higher property taxes. In Arizona, they're lower. We're going to, especially in Texas, we like to look for, to get anything that we can to, lower our payment. How does that translate?
Absolutely. Great question. Yeah, it's always good to talk in dollar amounts. What does this look like monthly out of pocket for you? So I did some quick math. For example, on a $350,000 loan amount, if you were to buy maybe 6 weeks ago when rates were close to 7% versus today where they're close to 6%, that's $250 of savings. So that can mean two things. It can either mean A, that you feel comfortable with the payment and that makes you want to move forward, or B, you can qualify for more. This is about 50,000 to 75,000 on the qualification side. So say when rates were 7%, you may have qualified for 300,000. Now you might qualify for 360,000 just because that monthly payment has gone down. So whether it means that your budget won't be as tight now because you can afford that dream home, or whether it means you can qualify higher and purchase a home that is at that higher price point that you've really been trying to achieve. Those are two ways that translates, which, is a big win for the clients out there in the market right now.
Awesome. That's really helpful. Yeah. Yeah. Again, like I said, sometimes it's really hard to translate this change. Everybody wants interest rates to change, but when we put it into concrete dollars, oftentimes that makes a lot more sense, especially when you're balancing things like homeowners insurance, which is higher in Texas, and property taxes, which are also higher in Texas. In Arizona, you're getting a little bit more, but property values are a little bit higher as well. So, those are kind of the key differences. Just want to thank you for coming on today. This was really informative. I think, I'm hoping that everybody really enjoyed it, and stay tuned for next, in 2 weeks, we're going to have a special guest, another agent that I work alongside with in the Phoenix market. He's going to jump on and give us his perspective on the market, what he's seeing as well. Until then, thanks so much for coming, everybody, and have a great day.
Thanks, Colin. Thanks for having me.
Yep.